All right. Today's Wednesday, the 19th of August, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. And shall we begin with what a day, what a day, what a day it was? What are you talking about, Mav? Look at the map, half green, half red. Looks like Christmas. Nothing happened in the market. What are you talking about? What a day, what a day. I'm talking about the bond market, baby. And the bond market is way more important than the stock market. And what happened today is incredibly important. But one step at a time, folks. Let's begin here with the map and the stock market and see what changed today. And perhaps the reflection of what took place in the bond market. Where can we see that in the stock market? What didn't change is, here's another day when we see the chips, the AI data center components going down, whether you're talking about AMD, Lam, Dell, SanDisk, the memory components, or even the construction components like Caterpillar, Vertiv, or even some of the utilities. They went higher, actually. So that was the exception. But you see AMD, AVGO, Intel, all of these names are down. At the same time, we see the hyperscalers still lagging. Yes, we get a rebound of about 2.5% for Amazon, but that was really oversold. Google, Meta, Microsoft didn't do much for the day. And of course, the resort and safety, the last resort of safety, I should say, in technology is Apple. And we see Apple shining today. So again, nothing really changed from yesterday. We see some of the software names still going up as hardware goes down. I guess the exception today is some of the utility companies like Constellation went higher and Marvell. These were the two exceptions in the theme that we've been seeing in the AI data center stocks. What didn't change is we continue to see healthcare being really strong. One of the best sectors, if not the best sector of the stock market right now. And today we got proof and evidence that this is the kind of sector that you want to be in as a long-term investor in the stock market. Today we got the announcement of the cancer vaccine from Moderna, which was up over 170% today. And that was, of course, collaboration with Merck, which was up about a little over 12.5% for the day. We've been owning Merck since last year and has been a fantastic holding. But the opportunity doesn't stop with Merck and Moderna. You see Eli Lilly continues to go higher, J&J, AbbVie, Amgen, another 4% to the upside, Gilead about 3% to the upside, Bristol Myers, and even Pfizer is beginning to participate. You see biotech going higher. You see the medical devices, MDT, Abbott, and Boston, and Stryker all going higher. You see the diagnostics such as Thermo Fisher and Donner all moving higher. The exception is the health insurance names, but those of course rallied way too much in the beginning of the year. So it's time to pull them back, specifically as we head closer to the midterm elections and the uncertainty when it comes to the healthcare policies. What didn't change is the strength that we see in energy, although we have a little bit of a pullback here and there today, but it remains a strong sector. So what changed today? Where do we see the reflection of what happened in the bond market in this map right here? We see it in gold miners. Massive gains today, WPM up over 11%, Newmont up almost 8% for the day. Massive gains for gold. And we see sizable declines in banks. So we see JPM, the big banks, the small banks, but specifically the regional banks getting absolutely hammered. And this, the reaction in gold, the reaction in banks, is a direct reflection of what happened today in the bond market. So this is what we're going to do in the program tonight. I'm going to explain to you what happened in the bond market and what's going to happen next, whether it's going to work or not. But before we begin, shall we say happy $40 trillion in National Debt Day. Yeah. USA #1, baby. Nobody can top us. This is, of course, part of the reason why we see interest rates or bond yields in the long run in the 30-year plus. Some countries have more than 30. We have 30 as the top. We've been seeing these rates moving significantly higher. The national debt goes higher. Investors, if they're going to hold your bond for 30 years, they need to receive higher rate because your finances are in shambles. You can no longer have a balanced budget and you continue to rack debt at a stunning rate. Matter of fact, if we look at the U.S. publicly held debt as a share of the GDP, we haven't seen such a reading here, folks, since World War II. We're not even in a war right now, at least not a real war. So why the hell are we having the same level of debt to GDP ratio as we've seen back in the World War era, at the aftermath of the Great Depression? Well, you can see the trend right here. It began in the aftermath of the Great Recession, the financial crisis of 2008-2009, when the Federal Reserve and the government decided to manipulate everything to rescue the stock market and the real estate market for that matter. And they began printing money year after year after year, trillions and trillions and trillions of dollars. And they said, oh, the national debt doesn't matter. Just look at Japan. Well, today we're finding out that there are consequences to this kind of behavior. And by the way, the GDP right now as it is manipulated, meaning that the GDP is artificially inflated because of AI spending. If you take that out, the share of debt relative to the actual GDP is way, way higher than it reads right now. Imagine that. And we're not even in a real war, folks. Is it really a surprise that investors require higher interest rates to hold our garbage debt? No, it's not. The consequence of the rising national debt is higher rates. And the consequence of higher rates is interest payment for the national debt. The service requirement is skyrocketing. We are now paying almost $1.5 trillion to service the debt. $1.5 trillion in interest payments alone. That is more than the national defense budget, what they call the war budget these days. That is more than what we spend on education or veteran affairs. So all of the idiots who kept saying for years, oh, there are no consequences to the debt, the national debt doesn't matter, what do you got to say now? Of course, the cowards are not even here to defend what they said, because they're all dead now. And those who are not dead, they're hiding in their holes, while we deal with the consequences. Why do we have a massive national debt problem? We spend more than what we receive. The government receives taxes. It spends more than it receives in taxes in funding all of the garbage that they fund. So the debate these days is one side of the political aisle, the conservatives, the Republicans, they say that this is a spending problem and we have to cut down spending. We have to cut down benefits. We have to cut down Medicare, Social Security, etc. And on the other side of the aisle, the liberals or the Democrats, they say, no, it's not really a spending problem. It's a revenue problem. Now, there is legitimacy to both sides of the argument. Of course, we spend way too much. We definitely spend more than we can afford, specifically in wars and waste and stupidity. But at the same time, part of the reason why we're not generating enough revenue to cover for that debt is when we were rebuilding the nation in the aftermath of World War II, in what it is described as the golden age of the United States. Look at the share or the contribution of corporate income taxes. It was significant. And then we got to the crony capitalism era in the 80s, when the corporations owned the government, when our government became a whorehouse for the highest bidder. The corporations bought the politicians, and now they contribute nothing, pretty much, to the federal revenue. And the burden comes from individuals, which again, it's not fair. The corporations benefit the most from the rigged economy, but they don't pay shit. And every time you ask them to pay, they say, oh, well, if you want us to pay more taxes, we're going to get rid of jobs. Well, now we have AI and they're getting rid of jobs either way. So might as well just tax the living hell out of them. But anyways, this is going to be the debate for you to decide as we head to the midterm elections. What matters to us today is what happened in the stock market, but most importantly, the bond market, because the stock market reacted just a touch to what happened to the bond market, but what happened in the bond market is significant. And if it continues, it will have massive ramifications to the stock market and the broader economy. We talked about yields going up and how problematic that is, because we have massive debt from the federal government and massive debt at the corporate level now, as we see these companies raising more and more debt to finance the AI data center build-out. What happened today? Yields went down. Not by much, but it was a noticeable decline. It went down to the same levels that we've been trading at in terms of yields on August 13th. Gee, what caused the 30-year bond yield to go down? It was supposed to go up, right? Because we have all of these problems, inflation, the war, the national debt, the corporate debt. Why did it go down? It went down because Scott Bessent, the Treasury Secretary, soiled his pants and panicked and decided to intervene to manipulate the bond market and reduce interest rates in the long end of the yield curve. It's been a massive problem. Yields been going up with no restrictions at all as a reflection to the reality of what's going on in the economy. And the reaction by this man is no different than the reaction of previous secretaries, namely, of course, Janet Yellen, who did the same thing. They have no solutions to the actual problems, be it the spending problem, overspending problem, or the lack of taxation of corporations. They have no solutions to that. The only solutions that they got is cheat and manipulate and buy more time and kick the can down the road and let the next generation deal with the shithole that you just created. And after generations of this kind of behavior and this kind of thinking, we're here now. We're dealing with $40 trillion worth of national debt. It's about to get much, much worse. So let's explain here, what did Scott Bessent, this jackass, what did he really do? Whether it's going to work or not. One step at a time, because we have a lot of folks who are not familiar with how the bond market works. So as you might know or not know, we have an inverse relationship between the prices of bonds and the yields. If we have demand for bonds, people buying bonds, the price goes up. And the government doesn't need to pay higher rates. They actually pay lower rates, aka lower yields, because the demand is pretty good. But when the demand is not good and the price goes down for the bonds, because we have net sellers versus buyers, folks are dumping their bonds, then the government needs to offer higher rates to attract new buyers to buy their debt. Which situation are we in right now? The answer is clear. The bond market is collapsing, the bond market is crashing, and interest rates are skyrocketing. What are the reasons behind this phenomenon? Well, many reasons, but it comes down at the end of the day to demand and supply. There's lack of demand to the government's debt. Nobody wants to buy the government debt with the yields offered right now. So we continue to see interest rates moving up as the prices go down until we get to a point where the yields are high enough for the buyers to begin to buy bonds. That's how the free market is supposed to work, right? You let the price does what it does and the yield does what it does, and at some point it comes to equilibrium. But these criminals know that they cannot allow the free market. So when we talk about the USA free market capitalism, bullshit. We have no capitalism. We have no free markets. If we have a free market, bond yields in the 30-year bond will be right now at 10-15% as a reflection of reality. If that is the case, the entire country collapses because the interest payment is not going to be $1.5 trillion. It's going to be much more than that. The interest rate on your credit card and your mortgages and auto loans will skyrocket too. And hence, the last resort is manipulation. But what are the reasons that are causing the lack of demand in buying our debt? Well, among the reasons, rising debts and budget deficits. If you continue to have budget deficits and your debt is reaching $40 trillion, investors will lose faith in your ability to repay them. At the end of the day, this is a loan. Whoever buyer it is, a bank, a foreign government, they lend the United States billions of dollars in exchange of what? Interest, yield, and then, of course, getting their money back at some point. When the government is racking up debt and budget deficits, well, the buyers will have less faith in the ability of the government to repay them. So now they want to ask for higher yields, higher rates to buy that debt. Another reason is the competition from corporate bonds, specifically the AI mania. So we talked about companies like Google and Meta and Microsoft and Amazon raising billions and billions of billions of dollars from the debt market by selling bonds. A lot of the folks who were supposed to buy the U.S. debt, the 30-year bond, the 10-year bond, whichever one it is, when they have competition from corporate bonds offered by Google or Meta, they look at the finances of the United States versus Meta or Google if it was a corporation. And which one are you going to buy bonds from? The United States, which is racking in more deficit, more debt, or Alphabet, a company that produces massive amount of revenues and profits, at least used to have great finances. Now, of course, they're facing the same problem as the United States. They borrow and they spend more than what they make, and their cash flows went negative. But even with that, their debt is still more attractive than the debt of the United States. And hence, if folks going to buy corporate bonds instead of U.S. bonds, well, the price goes down and interest rates go up. Another reason, foreign nations are selling U.S. bonds. We talked about Japan, of course. That was prevented because, once again, Bessent decided to intervene, devalue the dollar to rescue the yen. Because absent of that, the Bank of Japan would have dumped U.S. bonds to raise money to buy the yen and rescue the national currency of Japan. Instead, Scott Bessent said, we will do that for you so you don't have to dump our bonds because we have a problem in our bond market. It continues to collapse. If you guys dump, you're going to crush our bond market. We don't want that. But even with that, foreign nations at every opportunity, every time the price goes up a little bit, they continue to dump and get rid of U.S. bonds. Be it Japan, be it Korea now because they're facing debt and they're facing problems from the Iran war, or Saudi Arabia because they're facing problems and budget deficits from the Iran war. Be it even the UK, which is a net buyer for now, but if the energy crisis continues because of the Iran war, they're going to have to at some point dump U.S. bonds to raise cash to deal with the budget deficits and the debt and the problems that they got over there. And another reason, perhaps the main reason, it is inflation. Inflation is going up, and the bond market is reflecting the reality of inflation in the economy by moving rates higher. I mean, if you're going to buy the debt of the United States for 10 or 20 or 30 years, and you see that inflation is going up, you want to be compensated for that. If inflation rate right now is at 2.5%, 3%, 3.5%, 4%, whatever it is, you want to be paid more in interest rate than the rate of inflation. I mean, that makes sense. So once again, in a free market, the rise in interest rates is a reflection of reality. It's a reflection of all of these factors. It says, okay, there's inflation. You have to pay your investors higher rate than the rate of inflation. But these jackasses, the politicians, the oligarchy, the banksters, they want their cake and they want to eat it too. They want to continue to rack in budget deficit and debt. They want to continue to increase inflation and keep the wars and keep the stock market fluffed up. But at the same time, they don't want higher interest rates. It doesn't work that way, baby. Something got to give. But they got another trick up their sleeve, which is, let's manipulate the bond market. If we run out of anything rational to rescue the bond market, well, let's resort to manipulation and cheating. And how does that work out? Here it is. What you're looking at right now is what we call the yield curve. So the U.S. government issues bonds or debt with different time frames. We call these guys the monthly bills, right? All these are bills, and then there are notes, and then there are bonds at the long end. And it makes sense that if you're going to hold the debt of the United States government for 30 years, that you get higher interest rates than if you're going to hold it for 4 months or 1 year or 2 years. So this curve makes sense. This is how it's supposed to be. What the White House and Scott Bessent, the Treasury Department, and the Federal Reserve doesn't like is the fact that we have a big jump here as you go to the 10 and beyond. So maybe it's supposed to be, 4.7 at the 10. Right now it's 4.6, so 4.7 at the 20, maybe 4.8 at the 30, but not 5.2. They're panicking. But this is a reflection of reality, because if you go to the shorter end of the yield curve, you have more certainty. You're not worried about the U.S. government existence or ability to pay the debt for 6 months or for a year or for 2. But when you go to 10, 20, 30 years, I don't know. And that's why we see this big jump that we see right here. Again, it's a reflection of the free market. What Jackass Bessent did today is the following, which is, by the way, the same Operation Twist playbook by Janet Yellen. It is, let's buy more of our debt. And today, Scott Bessent came out and said that he's going to double the buying rate by the Treasury of the United States debt at the 30-year bond. You got to remember, yields were going higher because we have lack of demand. We don't have buyers at the current rate. They want higher rates to buy. But the Treasury Department says, okay, if you guys don't want to buy, we're going to buy our own debt. Going to be like Japan. We're just going to print money and buy our own debt and push the yields artificially down. Well, if you're going to buy your debt, how are you going to raise debt? How are you going to finance the government? Here's how you do it. You sell more at the short end of the yield curve. So here we see interest rates going up in the short end of the yield curve, but the long end, which is the core of the problem, goes down. Now, why is the long end more important than the short end? Because the long end determines, of course, the payments, interest payments for the government to service the debt. It also dictates the interest rate in the economy, credit card rates, auto loans, mortgage rates. And this is why they want to push it down, specifically as we hit the midterm elections. What is the problem with this kind of manipulation of the bond market? Here it is. Number one, the strategy works in the short term by scaring bond vigilantes from selling bonds, because a lot of this is bond vigilantes who hold bonds and say, you know what, I don't like the way that the debt is increasing every day, and I don't like the irresponsible spending by the government and the wars and the inflation and whatnot. So what I'm going to do is just dump bonds, keep dumping, and raise that yield higher and higher. What Bessent did today is he scared the bond vigilantes, at least for now, that, hey, if you guys are going to sell, we're buying. Okay, so You don't want to go against this because you're going to lose money. You're going to sell and then the price goes up and yields go down, so you're going to look like a jackass idiot. What Besant doesn't know is he's the jackass, because after a short period of time, bond traders are going to revert back to trading the fundamentals, leading rates to move up higher again. If inflation is not resolved, if the core of the problem stemming from the war is not resolved, if our budget deficits are not under control anymore, if we don't put a cap on the national debt, then bond traders at the end of the day going to revert back to trading the fundamentals, leading interest rates to go higher again. Number two, as bond prices rise, because this is what Besant is doing, right? He's buying bonds, so the price goes up, the yield goes down. But as the price goes up, recent holders who bought the 30-year bond recently are now incentivized to sell for a profit because they bought it at a certain price. Now the price is higher. So they're incentivized to sell and book that profit. Thank you so much, the Treasury Department. And what does that do? It leads rates to go higher again. Number three, devalues the US dollar, leading to higher inflation, which leads to higher yields again. It's absolute stupidity. I mean, look at what happened today to the dollar. The dollar absolutely collapsed. That's the price that you're going to pay to manipulate the bond market. And by the way, look at the manipulation that they've done. Just a tiny little bit of a drop here. It's not going to work out, folks. We have a technical breakout in the 30-year bond yield. We're going to go higher again. What he did is he crushed the United States dollar. Why does that happen? Because to buy the 30-year bond, you need to print money. You need to print dollars to buy your own bonds, your own debt. So we're now pretty much a shithole nation, like Venezuela and all these countries that just print their own money, buy their own debt, and they have insane levels of inflation. Devaluing the dollar leads to higher inflation. Why? Because the price of commodities go up. I mean, look at what happened today for wheat, for example. The prices of wheat moving higher. If you look at gold, gold moved significantly higher. Why is that? Because you crushed the US dollar. You're saying to everybody that you should not have any faith in the US dollar because we're going to crush it to rescue the Japanese yen. We're going to crush it to rescue the bond market now. Okay, message received. And now investors are saying, okay, where do we go next? How about oil? How about nat gas? How about gold? How about Bitcoin? So we see all of these assets jumping significantly higher today. Number four, and perhaps the most important, it signals panic by the Treasury to the markets. It tells all of us that they're panicking. There's a big problem here. The collapse of the bond market is not under control, and they're panicking, so they're going and resorting to extreme measures to try to rescue the bond market. But again, it's not a legitimate rescue because all what it does is just play psychology. All of this is just an attempt to scare the bond vigilantes from dumping bonds. That's going to work until it doesn't. And the rates will go higher, but the damage is done. The devaluation of the U.S. currency is done. You're not going to be able to fix that. And folks, at the end of the day, what is the resolution? Let's go back to what Besant is trying to do. He's trying to push long end of the yield curve down, and he wants to push the short end of the yield curve higher. There's an easy way to do that without crushing the currency of the US dollar. And that easy way is for the Federal Reserve to raise interest rates. If the Fed hike rates as they're supposed to, you're going to see the 2-year, the short end of the yield curve going higher and the long end going down because the bond market will be anticipating a recession to come as a result of higher rates by the Fed. Because higher rates by the Fed at the end of the day, the intended impact is to eliminate inflation. So if you're going to eliminate inflation, you eliminate the problem, and the bond market takes notice and we see yields going down. But they can't let themselves to do that because they're snakes, because they're scumbags, because they're criminals, and because they're assholes who want to continue to manipulate the stock market higher, and they cannot fathom even a down day of 1%. That caused them to blow up, as you've seen with situational awareness. Just a little bit of correction and funds begin to blow up because they're all indebted to the wazoo. They all have leverage. They all have insane amount of debt, and they cannot survive even under a mild bear market scenario. A pullback in the stock market of 25%. That's going to blow up all of the banks, all of the funds, and push the economy into a depression. Hence, they're not going to allow the Fed to raise rates right now. And what they're going to do is manipulate the bond market, try to manipulate the bond market, because it's not going to work out. You see all these reasons. It ain't going to work out in the long run. So what is the point here? Well, the point for them, for Scott Bessent and the Swamp, Howard Lutnick, Lunatic, and the rest of them. I bet that they're making money from all of this. I bet that before the intervention to save the Japanese yen, they bought the Japanese yen. And before the intervention to buy or to rescue the bond market, they bought bonds. I wonder why. You look at Lunatics, Cantor Fitzgerald, which is the company that he used to the fund that he used to manage before he became the Commerce Secretary. It's having its best year ever. How did that happen? Oh, he says, oh, my sons are the ones who are running the company right now. I have no affiliation at all with the company. Yeah, I bet you don't talk to your sons, right? I bet you're not feeding them insider information. I mean, look at what's going on right now. Cantor is now allowing the hedge funds to place big bets. So the funds that are investing in Cantor, they're now allowed to bet on the Kalshi prediction market. Why is that happening? Because they can share the insider information. Howard Lunatic is pretty much the shadow, the handler of President Trump. You can see him in the plane, always listening and trying to take a peek so he can get whatever piece of insider information he can get his hands on and then share it with his sons, with his firm, with his buddies, and they bet on it. So now the hedge funds will be able to bet on Iran war news, on any economic news, any policy news. Folks, I hate to say it, but I don't use this word lightly, but they're raping this country. That's what's happening. And we're all watching and pretending that this is okay, that this level of corruption and manipulation and cheating, that this is okay, and it's not. But we have a population that's completely zombified and cuckified, if that's a word. We're all a nation of cucks right now. And everybody says, well, everybody does it. Everybody, the Democrats do it, the Republicans do it. It's business as usual. The collapse of your nation is business as usual.